I mean, come on. Does it get more like why would you be fearful of this? It's the same exact stuff that happened like every single time. If you don't see it right now, you're gonna see it a week from now. If you don't see it in a week from now, just get. All right. So we see the beginning of the month is obviously going. I mean, just a ridiculous amount of models. Okay, we already gained data for 11 days here now, and literally every single day had something. Okay, whether it was a short-term scalping opportunity, um, and once again, once you're back testing and gaining data, okay, you're just literally figuring out and like showing yourself how many times does the model actually repeat. You're not trying to prove yourself that the model works. If you still have to prove to yourself that your model works, okay, that's okay. You just really shouldn't be trading live funds yet. That's all. So the beginning of April was very good. Now what we're gonna do here is we're gonna go back to this week right here. So we're just gonna do a few more days here, I promise, and then we'll get into live price. I know most of you are just saying just put the live trade in the bag, bro. But believe it or not, this is very important. So immediately we're gonna look at. Okay, this was a holiday week, so we're just gonna kind of skip past that. We'll look at April 21st up until April 30th. Okay, so going into it, once again, before we start, it's not a complicated thing at all. Okay, if it's not a light bulb moment, it's not something that looks clear to you, do not trade it. The draw has to be obvious. The light bulb sensation in your mind has to be going, and it's be like, oh wow, I've seen this before. This is what I want to be a part of. Boom, beautiful. Trade it. Okay, and obviously incorporating time in the higher time frame key level is what brings it all together. Okay, so looking at it immediately, let's see here. What did I say I was going to start on? Monday? Yeah. Monday drives down into a discount relative to the daily range. Okay, so we trade an optimal trend entry right here, 62% retracement. So that's a higher time frame key level you can use in and of itself. But in this case here, you can just use, if it lets me take it off, there we go. You know, for example, this down candle. So granted, that misses the opening by a little bit. So let's go down to the hourly. Okay, perfect. So don't even need that. This liquidity void here was delivered in price. Boom. Completely fills that in. I'm sure there's a lower time frame inside of this, but I'm not going to scale down right now. Price is in a pretty significant discount, but that wasn't until this huge sell-off here. So, I mean, you can look at the high resistance and, you know, real time, definitely not something that I'd look to engage with. So let's scale back and let's see if there's anything we can actually look for to go against the grain. Okay. So, boom. I mean, beautiful. I already see something potentially here. Not guaranteed, but we're going to dive into it. Ever since London, price rises up, creates a high, drops down, drives up again, drops down, and creates this ridiculously obvious trend line. This is the type of stuff that you want to see when you're trying to engage with price. This is what you want to see. Something like this generated. Okay, this is way too obvious, way too clean. Come on now. All right. Price drives down in that higher time frame key level. Okay, completely closes in this liquidity void, trades in that daily optimal trend entry, you name it. It's all there on the higher time frame lines. Now we're going to scale down to see if there's anything that we can get in here with. Looks like I already have annotations on this. So yeah, I actually remember trading this. Boom. This was beautiful. I hope this performs here today on this Monday because this is going to be a breadwinner. We have a ridiculously obvious trend line liquidity pool resting above here, but we don't even need to target that. Look what happens here. Price drives down once more. Creates a swing high, another swing high, lower swing high. That's all you need to target. So now, can we incorporate time? Number one, can we incorporate time? And do we have a light bulb displacement? I don't know. Let's find out. Scale back. Okay, immediately, I'm pretty sure I remember this. Matter of fact, was it Monday 21st? Did I call this out in the signals tab? I mean, this was just textbook light bulb. Like, this is the type of thing that you want to wait for and it has to be obvious. Let me go back to the 21st. Boom. Okay, yes, perfect. Okay, so literally right here. Okay, it looks like I took it on 6 micros, but that's pretty realistic just because the volatility index was really high. So, yeah, called out in the signals tab. Beautiful, not bad. I could have sworn I was really having some deja vu there, remembering that, but Anyway, let's dive into it. Okay, that's not really the important part. The P&L, okay, put it all to the wayside for a second and think about it. Look at this right here. Beautiful. Beautiful, beautiful. Come on. I mean, come on now, guys. I mean, what are you waiting for, right? It's right there. It's right here in front of you. What did that tell you guys? It's like, how do you know when to wait for the reversal? Look for the hunting window that I supplied you guys with the specific model. Okay? And wait for an obvious displacement inside of a macro or the hunting window. Okay? In this case here, once again, we deliver that daily optimal trade entry, we deliver the gap, that liquidity void, and then we drive down here. We're already in a really ridiculous discount. And now we have the 250 to 310 macro. If there's ever a high quality time to trade a Model 3, on the PM session, it's right here. Okay, it's here, or if not, then it's going to be, 150 to 210. All right. In this case here, it's like, why wouldn't you long it here? Okay, let's be realistic. Maybe you would have got break even here after longing here and it came down, took you out. That's okay. You take a second attempt and you go at it. But the fact of the matter is, the reason why I went long here, like even though this, looks good, is number one, it's not inside of a macro, or utilizing a macro. And number two, it wasn't as light bulb of a sensation like this. Why is this light bulb? Why? It creates not one, but two fair value gaps here with the volume bounce. It's a huge sudden run up. That's what you want to wait for right there. Huge sudden run up in price. Looking at the 5-minute chart. Okay, because I'm looking at the 5-minute chart right now, and I'm showing you guys, like right here, it's just a little bit shaky here. So usually you want to it's just a matter of scaling through your time frames. Like anywhere from the 5 down to the 1-minute chart, guys, you can look for the entry model. It doesn't matter. Okay, so we have that light bulb displacement. Several things taking place here. This is creating a breaker now. Smashing through an opposing up candle, creating a breaker. And, right, it leaves open this gap and creates a market structure shift above this high. Boom. Right with the macro. Now what does price do? Drops down to the breaker. And as if things need to be amplified to make it more high probability, what do we have here? What did that tell you guys? All Model 1 and 2 are doing is literally just making things more high probability for a very, very specific entry model. This down candle here is formed right at equilibrium. From the high, the target that you're looking at, down to the reversal low, this down candle was formed right at equilibrium. The market, smart money, is placing that in, that sell side delivery right at equilibrium for very specific reasons. So you don't even need to know any of this. All you need to know is, this is a model number 3, but this here amplifies it. Okay, so let's say that you weren't convicted. Once again, I'm not trying to promote the idea that you had to pick bottom. So let's say that you didn't take this fair value gap. This would have been a great long. Okay, but you kind of passed by, price drives down. Oh, now all of a sudden we have that Model 2 entry point. We have that fair value gap inside of it. Boom, volume imbalance. I don't know about you guys, but I'm taking this every single time, and you want to be risking your live money on something like this, especially when it's delivery out of a breaker. Okay. Now I want to remind you guys, the entry is the least important part. Now it is important for stop loss placement, but it's the least important part. The real important thing here is the obvious opposing buy side liquidity, the higher time frame level that we delivered, and the timing aspect of it, the macro that set the stage for this model. Okay, so let's go back. Where are you going to long? I mean, come on. Does it get more, like, why would you be fearful of this? It's the same exact stuff that happened, like, every single time. If you don't see it right now, you're going to see it a week from now. If you don't see it in a week from now, it's going to arrive to you on time. You're going to have that light bulb sensation. It's all going to come to you, and you're going to understand every single trade that I take live on stream. So right here, you put on the long position. Where's your stop loss go below? The Model 2 gap. Okay, probably would have used like 6, like I said, 6 micros I used on this. I showed you guys the execution just because the volatility index was pretty high. But anyway, forget about the P&L, just think about the model. Boom. Why are you targeting here? It's just the lowest hanging fruit, easiest objective. That's all. And we're kind of running short on time, in terms of until market close. So fast forward, literally zero drawdown on that. Once again, anytime you have a Model 1 or 2 entry model inside of a Model 3 and 4 context, okay, you're usually going to have limited drawdown. Okay, that's why it's so powerful. Beautiful. 12 days of April data. How many more examples do you guys need to see to prove to you that this thing is there? It's always going to be another opportunity. Okay. Is there going to be some weeks that are pretty tough to get through? Yes, last week was. Okay. But you sure as hell can, believe that there will always be a very, very similar in nature new opportunity that come your way. It's just about if you have the willpower to grab a hold of yourself, have self-control, eliminate fear entirely, which is an illusion, all right, and just execute the model when you see it. Everything surrounding that, patience. If you don't have self-control, you're probably going to take trades that aren't even actually there. You're not going to be trading the model. You're just going to be trading some random price swing because you want to pass your eval right away. I'm telling you, if you try to rush it, you're not going to do any of that. Okay? So let's fast forward here. And this was, come on now. This was a legendary day above. I'm already a little bit advantaged here. So I had the benefit of hindsight in a day that I already smashed it. Literally four winning trades called out in a row. But why? Why out of every other day did all of a sudden, why was I calling out so many trades inside of this day here? Because it was performing back to back to back to back to back inside of the same exact hunting window. Same exact stuff every single time. Let's go down. Okay. Don't mind this really ridiculous new opening gap. Okay, that's pretty aggressive there, but look at it. Is it the best market environment in the world? Yes. Why? Because it's generating liquidity pools back to back to back to back. Okay? Let's take a look. I remember live streaming with you guys. What takes place? Let's go ahead and establish our hunting window immediately. Okay? Let's just block everything out for a second and just look at the hunting window. Okay? Inside of the hunting window, do we have a nice reversal? You can already see it right here. All right? Right here, do we have higher time frame key level delivered? Okay, once again, doesn't matter if it's smashed through later on. It just matters how we utilize it real time. So right here, I already see a new opening gap. Boom. That's it. That's all you need to utilize. You don't need to look at anything else. Okay, new opening gap been delivered. We smash up into the high there. Do we have an obvious opposing sell side liquidity pool inside of our established hunting window right here? Once again, same exact timing. Okay? Same exact obvious opposing liquidity pool. Look at this right here. Come on now. Who's been making money? It's not a hard thing to think about. 9:30 opening bell. Creates a low. Higher low, higher low, higher low, higher low. Come on. This is being taken out every single time. Might not happen right away, but it's going to happen. Every single time. Whether it's in the same session, the next day, it's always going to come back to it. It's inevitable. Every single time. Okay, hunting window. This is the only time that you want to trade model number 3. When the draw is obvious. It can't just be, oh, this might, or if this, then that. No, it has to be light bulb. This right here is something that we see all the time generated. Okay, this is very, very obvious. All right, what's the lowest hanging fruit? Once again, you never have to hold the whole thing. You can hold runners. This right here was some type of Trump tweet. Okay, so that was a different circumstance. But this right here was the lowest hanging fruit. Was that tagged? Yeah, it was. This is a great scalping opportunity. Why? Buy stops already exhausted. We have that new opening gap, higher time frame level. Obvious opposing draw inside of the hunting window. So we have the time aspect. We have the opposing draw aspect. We have higher time frame level. Okay. Now what do we look for? Do we have a light bulb sensation? Let's go back on it. Price creates a fractal intermittent term high right here and then drops off. Why is this light bulb? Number one, it's smashing through a solid body opposing down candle right here. Boom. See that? And it creates a Fourier gap right here. That's key. The Fourier gap is key. Let's say that you didn't have conviction in this, right? And you just didn't want to short this. Now, I shorted this on live stream. Okay, but let's say you didn't have the conviction. And you just wanted to wait a little bit more. That's fine. Look what happens here. Further solidifies the light bulb sensation, creates not one, but 2 Fourier gaps in here. And now you have the benefit of these up candles. Boom. You can short that right there. That's the highest quality short that you're ever going to find. Let's pop on replay. Remember, where are you going to short? right when it dips up into that fair value gap plus up candles right here. And what are you targeting? The lowest hanging fruit right down here. That's the Model 3 initial target. Can you hold a runner down below here and usually it's going to be tagged right away? Yes, you can. Assertively press, like, keyword assertively. You're assertively pressing that sell button. You're not like, oh, man. No, you're pushing the button and you're trusting the model. Put your stop loss above the high because it's up candles plus the fair value gap here. Okay. So you're weathering both fair value gaps plus the up candles. And then you're targeting the lowest hanging fruit. Beautiful. That's all you need. Boom. Take your profit and close the damn charts. That's it. You're good. You made your money. That literally offered $900. That's all you need. Okay. Very specific timing aspect. Inside of the hunting window. Very specific liquidity pool I'm pointing you towards. Everything is there. Everything is going. Okay. But this day here was monumental. It was beautiful. We executed this on stream. And then we scaled forward. And obviously this ended up turning into with an absolute storm inside of a good storm inside of the signals tab. And it turned into a $4,500 day. So that was obviously beautiful. And I was happy to be able to share that with you guys. So anyway, all of a sudden, we have a huge price swing lower. Oh, what do we have going here? Come on now. It's there, guys. Okay. Higher time frame delivery into an hourly gap. That's our higher time frame key level right here. Boom. David, good morning, brother. I didn't see your comment till now. Price drives down into the higher time frame gap, and what makes it more significant, sweeps out that entire trend line now and completes the original Model 3 that we're looking for. Okay, by the way, there was another Model 3 here with the 1250 to 310 macro. Matter of fact, let's back it up. Why was this a model number 3? Why did I execute on this trade and literally make a bankroll? Once again, same exact elements. It's not complicated. If you're overcomplicating it, please stop. Stop overcomplicating it because it's not a complicated thing. Okay? If you're overcomplicating it, chances are you're taking in way too much information from too many different people and you're trying to factor in every single concept for every single trade. And if you're doing that, that is stupid. Don't do it. I promise you, just simplify it. Simple is better. Okay? As long as you have, like, smart money way of thinking. All right? Daily inversion for value gap right here. Bounce price range, boom, comes up and tag that. I'm going to be utilizing that as my higher time frame key level. All I'm doing is watching how price reacts up off of that and utilizes it at a very specific time. Does price sweep buy side as well? Sure does. Do you need to map this out? No, but it's helpful. Okay, boom. Takes out that hourly swing high. Let's scale down and let's factor in timing in the opposing draw. Do I even have to ask this question at this point? Come on now. Is this draw obvious? Yes. Yes. The Model 3 was never completed. We had a Model 3 inside the hunting window here, but all it did was further solidify this trend line. That's all it did. This is so obvious. Not only because it's a trend line, but it's also previous session lows, right? Everyone that's making money in the AM, that's where their stops reside. Down here, below these relative lows, and then right here. Below that, we have a large inefficiency in price. So that makes it even more high probability. Beautiful. Beautiful, guys. Come on. It's the same exact stuff every single time. Every single time. The fact that this thing repeats is the only reason why I can make money consistently inside of this market. It's very, very simple. Okay? Boom. Buy side liquidity rate right here. Now, it's like, oh, well, okay, how do you know not to trade inside of all this and get chopped up? The macros. Okay, wait for that light bulb sensation inside of the macro. Okay? So what you're looking for here, boom. What happens? One of two things that the macro is going to do. It's either going to set the stage for the move or it's going to perform the move. In this case here, it actually did both. Okay? So what we're looking at is inside of this macro, right? We have the obvious opposing draw. We already established that. Where's the lowest hanging fruit? It's going to be right here. Okay, for all the AM session holders. Boom. That's all you need. You don't need to target anything else. Higher time frame level. We already established that. Why? Buy side rated, daily inversion for value gap. Comes up off of that. And then we have that light bulb moment. Boom. 90% of the time you're going to get an entry right here, but it didn't give it. Okay, real time. This was really hard to be a part of. Really, really hard to be a part of, because if you saw how quick price was moving, I mean, it was ridiculously hard. Even if I wanted to like call this out or something like that, just not easy. Okay, but the fact of the matter is, real time. When I saw that light bulb moment, real time, right after I saw this, before this candle closed, it wicked right back up into this change of state delivery right here. Why is this change of state delivery key? Oh, it's the last up candle before the down move. Okay, you can view it that way, but it's much deeper. We sweep an old high, and then we create a light bulb displacement inside of the macro while we already have the mechanics for model number 3. We trade below that opening price that swept buy side. Boom. Short that. Target the low. Back-to-back model number 3 is taking place on the same draw on liquidity. Doesn't get much more sweeter than that, guys. Does it? Okay, you can't expect every single day to be like this Tuesday here, because it was just ridiculously clean. Okay, but when these days are here, you want to push that edge every single time. Okay, assertiveness. Can't stress it more enough. Now, the funny part is, neither of these trades were even the highest quality trade of the day. It was actually right here on April 22nd. Once again, let's bring receipts. Nothing was more high probability than what I'm about to show you right now in this singular day right here. April 22nd. Let's go to it. Oh, okay. Here we are. Scroll past it too quick. Boom. It doesn't get more text. We literally called it right at the second marker. Boom. Literally right there at the entry. Right at 2:12 p.m. Boom. And then we take profit. And obviously that was a pretty legendary day after I caught the model number 3 right here. Okay. But the fact of the matter is, look, I'm just proving to you that this is transferable live. It's not just some hindsight stuff. You guys already know this. But the fact of the matter is, what's the mechanics behind this? Higher time frame key level. Check. Why? If TradingView loads for me, I'll show you in a second. Here we are. Hourly Fairway gap delivered. Boom. Why is this even more high quality? The delivery into the hourly gap. Once again, if TradingView loads for me, I'm about to show you in a second. Here we go. Model 3 was already completed here. Why? Because we swept the trend line. Beautiful. These relative lows, boom, swept. Hourly gap, swept. Let's go down to the 1 minute chart. Is the timing aspect there? We already have the higher time frame level established. Is the timing aspect there? I already have it annotated here. 350 to 210. Macro. It's not inside the hunting window, but it's in a macro. Is there an obvious opposing draw? Absolutely. Look at this large wick that was left behind after this huge drop down. Everyone that's been making money on this, where's their stop loss going to go above this quote-unquote doji? The final piece of this puzzle is light bulb displacement. Do we have that? Doesn't get more textbook than this for light bulb displacement wise. What happens? Smash through opposing arrays. All this through here, eliminated. Market structure shift. Not 1, not 2, not 3, but 4 Fairway gaps were formed in price. And this is where you want to long. Where's your stop loss go? Let me show you. I mean, this is beautiful, guys. Seriously. I mean, I want every single one of you to just like succeed with this model. Okay, if you guys can really just stick with me through live price, I mean, it's gonna come to you. You'll never need anything else. Long. Stop loss. Weathering the gap. Take profit above here. What are we looking at? Okay, and actually I'm looking at here's a breaker, so I put my stop loss right down below here. So essentially we're weathering both Fairway gaps here plus this breaker right here. So when we're looking at it, or excuse me, the breaker right here, sorry. So whenever you want to have really precise stop loss placement, just reference breakers. You want to put it like a little bit below that. Fast forward. Obviously, come on now, it's just one of the most textbook Model 3s. Very limited drawdown. That's what you're going to expect when you have that light bulb moment. And there you go. You are paid again. Now, let's get past this day. Legendary day. Okay, you guys have seen enough. Let's go. Live on stream, we traded the model number 3 here. You should remember this wasn't that long ago. April 30th, we're going to collect yet another data point. This is like the 15th, 16th day that I overview for you guys this morning. A lot of you just joined, but here we are. Yet another example of a textbook model number 3. The 4 elements, what are they? Higher time frame key level, obvious opposing draw, the time aspect, hunting window, light bulb displacement. Okay, I know I'm sounding repetitive here, but that's what it is. It's a repeating model. Like literally, I'm gonna be repetitive if it's a repeating model. If I can't show you the same exact stuff happening, then what do we have? We don't have an edge. We're just in here hopelessly gambling and hoping to make a profit. We're not hoping. We're knowing. Okay? Once you arrive right on the timing that you shouldn't be rushing it. You're gonna get there. Okay? So let's look at it. This drop down here, why is this so key? Because we had such an accumulation buildup. Now, all these clean models are perfect. You can make money easily, but then you hit a roadblock like this right here, and what do? This is when you preserve capital and relax, wait for the high quality opportunities, the light bulb sensation. Let's go to the daily chart. What happens? Price drives down into our higher time frame key level. What is that? Three things. Fair value gap. See that? Triple bottom. These 3 daily lows all swept. We have sell side on the daily chart swept. Fair value gap. What's this right here? New week opening gap. So we have 3 high quality higher time frame levels blended together. We can check this off right here. Now the question is, do we have obvious opposing liquidity? Come on now. Yes, we do. Look at this triple top right here. London. Midnight opening. Trades up, generates this triple top, and we have more buy side up here. Look how clean that is as well. Relative equal highs, triple top. Very obvious opposing draw on liquidity. This is how you want it to look. You don't want it to be something you're guessing about. You want it to look at and be like, okay, that's way too smooth, or, you know, it is a fair value gap above this high here. That's really high probability. It needs to be high probability. Now the question is the timing aspect there, and is the light bulb displacement there? Let's check it out. You guys should already remember the deal here, guys. We traded this live. We made $1,300 on it. Let's scale back. 10:30 to 12:10. That's the hunting window. So it starts right here, right? To 12:10. You can see it's a little late if you waited for that. No problem. You wait for the macro. What do we have here? 9:50 to 10:10. One of the most clean 9:50 to 10:10 setups I've ever seen. The macro's there, higher time frame key levels there. We have an obvious opposing draw, but guess what? You don't even need that. You don't need to hold for that. Why? Because look at this right here. I mean, come on now. Is this obvious? If it's not obvious, then you shouldn't even consider this with live funds. It's obvious. Come on now. Triple top inside of an already outstretched market into a discount. And then we enter the macro. Why is this light bulb displacement here? I mean, just look at the 5-minute chart even, right? Look at the 5-minute chart. Multiple things going on. Market structure shift above this high. Changes day delivery above these down candles. Beautiful. Beautiful. Come on. It's beautiful. Light bulb sensation right there. Why? Remember, changes day delivery plus trading above this old swing high. Let's get onto the minutes chart, and what do? You find your entry. It doesn't really matter what time frame you enter on, guys. It's anywhere from the 5 to 1 minute. It's valid. Price runs up here, creates the quote-unquote venom, drops down into it. Let's say you didn't have the conviction yet, and you didn't want a long here. That's fine. Wait for another displacement. Boom. What do we get? Another displacement. Now it's smashing through opposing rate. See how it smashed through this inversion gap? And we have 1, 2 fair value gaps created. That's that light bulb moment. You want to long this, and you can literally just target the highs, and you don't even need anything else. So, popping on replay here. I did get a perfect fill, so this should be $1,300 as well. Okay, where's your stop loss go? Very simply below this down candle right here. Pretty simple, right? Take profit. Go through. And there she is. Model number 3. 16 days we went through this morning. All with the same mechanics. Beautiful stuff, guys. Okay? If you found some usefulness out of that, I hope you did. But, I mean, I'm here for you guys. I want you guys to succeed. The model repeats. And now we're going to hop in live price, watch it, tape read it, and see what it presents. Okay? So, good morning to everyone that just joined.